Alright, so past couple of days I've been trading cash account, and I decided to buy a small prop account to test a new strategy on the prop account because I don't want to lose money with the cash account because the fluctuation is too much. So with these cash accounts, these are like $80 from Funded Next, and you have to gain about $1,500. You can do it in one day, and after that, there's a 40% consistency rule. You can get paid on these accounts for about 3 days. I haven't had these new accounts, so I'm gonna test them to see how they are. They said if they don't pay within 24 hours, if you don't receive the payout within 24 hours, you get an extra $1,000. But I heard a lot of good reviews about them, so I'm gonna go ahead and try to pass this account next couple of days, hopefully in one day if I can, and go from there. So with these accounts, since the uh, drawdown is only 1,000, you don't want to risk more than 2 to 3 contract on each trade, especially if you're scalping. So a couple of things. First of all, thank you if you're new, and also thank you if you're returning viewers. Past 2 days, I can't believe how many subscribers and likes and comments I got on the past 2 videos I made. I was not expecting the growth that I got in the past 2 days, so thank you for watching it, liking and commenting. And another thing I noticed, lots of people think that I'm teaching. I'm not really teaching, I'm documenting my journey. I just found a new breakthrough in my trading journey, and I was very excited about it, and I decided to document my journey. So from now on, I'm documenting it. Even the past 2 videos, I was really kind of sharing it. So I'm gonna use YouTube as my public journal and documenting journey. Uh, just to be clear, if I wasn't clear in the past 2 videos. Yeah. So, and then another thing, none of it is financial advice. I may say things that I may not think clearly at the time that I'm doing it, because this is my first time recording trading content. So sometimes I speak faster than I think. So without any further ado, let's get right into it. So today I woke up around like 7, 8 a.m. I had to go straight to work, so I couldn't trade anything. I marked my charts and everything, but since I was at work, I was with a client, I kept seeing my alert, but I couldn't trade any of my ideas that I wanted to trade in. And last night I missed this trade as well. But let's get right into it. So if you go to 4 hours, I always start with the daily. So that's how I think, that's how I start. So we're on NQ. I start with daily. If I don't see any candle closure above any of the wicks, then I go down to 4 hours. And after 4 hours, we saw this one. This candle closed through this wick. So then we go to 1 hour to see if we can find any entries. So at the end of the previous days, we kind of got this morning star formation. This was a quick trade you could have taken towards the indication line of the 4 hours. And then after the market opened, you could have also taken this trade from here. I would say from here to maybe here. And then this morning, so every time we have a indication, correction, and a continuation, the continuation always goes and hit the next drawn liquidity. So for example, if you break through this line, and we are coming down, so we broke through this line, so we broke through this line, correction, and we're about to go down. So the next logical target would be this. So of course we're gonna go down until we hit this line. And that's exactly what happened in here. So we hit this line, And this is where I was up when I was oops. So when I got up, it was around 8 a.m., which is like every hour you kind of where it closes it, you see the end of it. So the 8 a.m. candle, when it closes it, you're at, it's at 9 a.m. Same thing on around this. So I was at work, I saw this, I marked it, but I was with the customer, so I couldn't trade this one. And the reason why I knew the downward correction was over, because we already took out this liquidity from this indication correction continuation model. And what I did, I kind of marked my chart right here. Let's make it green. There it is. And then I did another one for here. And then I did another one right here. So I had an alarm here and here. I saw my alarm, but since I was with the customer, I couldn't take it. And then you go down to 1 minute, kind of go through it. So any of these lines are my entry. So one of the things that you see, the price came here, came down here, took out this line, went above it, inverse this gap. This would be one of your entry right here. But let's say you missed this for whatever reason. And if you trade what you see, it's kind of obvious because we're on an upward trend. And our next obvious target for liquidity is this 4-hour line. You can target here, or you can target here. So those would be my target. And then market gave you another opportunity about an hour later. A couple of things that I didn't mention in the past 2 videos. So for your entry, like this, if you see an inverse gap, like this is a gap that we completely inverse under 1 minute, that's a great entry, especially if it's within our POI, or point of interest. Even here it would have been fine, here would have been fine. So you got a couple opportunities. So if you would have gotten somewhere around here and marked here, yeah, so you would have hit your liquidity before this next retracement. Yeah, so 134, so 112, like this. And market gave you another opportunity, and you could have my alerts in here, and again I couldn't get in. And this one, the way I get into entries, or I set limit orders, is like if you see this candle, the red candle, the downward candle, closes below the line, and then you see the next green candle. So as long as the next green candle flips the previous candle, or vice versa, if you're shorting, I'll show you a short example as well. Then you can get in right here, and then this one would be even a better risk to reward, because you would have gotten out here, your stop would have been right here, right there, last 68 ticks, and then your first target would have been here, second and third. So you could have bought 3 contracts, take one here, take one here, and take one there. So, and then let me just reset this. So yeah, 2 opportunities in the morning, 1 opportunity last night on the Asian Open. Then once these targets are hit, the reason why I left this 4-hour indication, and the way like I do it, I color code them so I can remember weekly, daily, and 4-hour. I put them different color, and I write it 4HI for 4-hour indication. Around the afternoon, we came and kind of rejected. We reject here, so we had 3 candles that none of them closed above the previous wick. And then when the Asian market opened, that was another opportunity that I saw you could have taken it. And the way I see an opportunity is pretty simple. Let's do this, do this. Let's do red one. So we had one, two, yeah, only two opportunities today. This morning, and then the afternoon it was kind of choppy, so no opportunities. But on the market open today, which by the time I got home we were here, so I couldn't take these trades. There it is. So could have taken this quick trade, close above it. Another thing, it has to be close above it, and then we have to either close below it, or we have to flip the candle. And the most recent candle is this one. So we flip the candle in this second one, and we get it right here. Stop loss goes here, and you can target right here. You can target here, or if you have any liquidity on the right side. So the safe area to target are always the hourly or the 4-hour gap at the end of this hourly gap. That's another thing, that the more you start trading, the more you start seeing where price has reaction. Because the issue is like going from here to here, that's such a big jump, and you may not be able to get there. Sometimes we do, sometimes we don't. But I doubt that like right one day before the FOMC we're gonna have that type of crazy move. Usually all the crazy moves happens on the FOMC day. So at the end of your fair value gap, it would have been somewhere around here, and you could have dragged your after your first target, you could have dragged your stop loss. If I would have dragged my stop loss here, 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 so I would have been a stop right here. So yeah, I could have catch a 1 to 3, 1 to 3.5, 124 ticks, 73 ticks. So not a bad trade. And that's all I do. I just draw a line, and when I come back to it, sometimes it touches it and continues. But if I see a downward movement and an upward movement in a very clean flow of the price action, I usually get in. But if I see a little bit of consolidation, a little bit of choppiness, I'll wait for the price to close above it and to close below it, either to close below it or give us an inverse fair value gap. So you have like three options: inverse fair value gap, and then close below that previous candle, or close below the line. So you have three options. Sometimes you get all three, sometimes you get two, sometimes you get one. You don't need all three. So those are your entry signals. A little bit more entry signals than just a candle closure below the line, and you'd be done. So that would have been the trade for that. I guess you could have taken this one too, because we fill out this. Yeah, we just came in, took this gap, and we start. This would be like super quick scalp video would have been. I mean, trade would have been. So right here. Oh, by the way, if sorry, if this mic sounds good, just let me know. Down to 1 minute. See, like this is exactly what I'm talking about. Sometimes price doesn't close below it, because the price has such a good flow that all you need is, even if it gets close to it, that's all you need. You just get close to it. Take this tray right here. Put your Put your stop loss around this fair value gap, or below this fair value gap, sorry. And your first target here, second target here. And you let the rest just go. And you would have been a stop right here. So that was the NQ trade. I don't trade ES as much. If I had, I would have given you more example. I usually monitor ES, and the reason why I monitor ES because ES and NQ they're extremely correlated. So if ES comes down and take a certain liquidity and start reversing, and you're on NQ and NQ is the lagging index, that means that you either need to extremely aggressively trail your stop loss or just get completely out of the position. And vice versa it applies. So if you trade ES, you don't trade NQ, same thing applies. If you have more question about that, just ask me in the comment section. I'll make another video about that. But it's very simple here. So yeah, I can see why this one, like you're like, why we start reversing out of nowhere. It's because ES took this liquidity and I start reversing. Because ES and NQ, they always pull each other. Let me see if we had anything good on this one. Oh yeah, we did. We had like 2 good opportunities. Very similar price action to NQ. So yeah, we broke through this, came here, and then continued, took this liquidity. So we failed to take it out, and then we took it overnight, and then around here, that's when you see the price action. So 1, 2, 3, 4, boom, indication. So this is what you do. There, same issue. I believe I set an alarm for this one, but I couldn't take it. So there, and then maybe another one right here. So you set alarm here, 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 and then see which one gives you the best opportunity. So you go down to 1 minute. Oh, by the way, if you do your trading based on 4 hours, then you can just do it based on a 5-minute entry. Come in. Based on the 5-minute entry, and you go from there. Let me see. So after you're done with this, then you go from here. Then once you close below this line, then you go here, put your stop loss right here, and you target. If I can move this, so you can target here for your first take profit and here for your second take profit. And that was 927 right before the close. So that would have been a perfect trade. Shh, Ruby, stop. That's my cat. So there you have it. So you had one opportunity, you had another one here, closed above this, here. So this was your first take profit, second take profit. Sorry if I rushed through it today. So leave your question down in the comment, and I will start trading the new account from tomorrow. See you guys in the next one. Peace.